What's going on? Welcome back to the Positivity Chef podcast, where we talk about everything personal development and financial literacy related. Damn, on this episode, we got a lot to talk about. It's been a busy week, a crazy week, across from the markets all the way through to, day in the life of just an ordinary person. On my way here, I paid almost $103 to fill up my tank, and I didn't even put premium anymore. I can't even afford to put premium in my car. Well, I mean, I could afford it, but I don't want to. I don't want to sit here and pay $120 just to fill up a 435. That is absolutely ridiculous. So I downgraded to mid grade, which is 89, and now I'm still paying over $100. I thought it was going to save me a little bit more money. Anyway, besides the point. Other than that, what happened this past week, man? We have so much stuff to talk about. I have a lot of gems to give the audience today, and how to start taking action, what to do. Funny thing is, I put a TikTok out the other day. Put a TikTok out, and it's about inflation at 8.6%, et cetera, et cetera. And someone comments, the markets are crashing right now. Because I guess I was telling people you can't have your money in a savings account. You have to invest your money. And someone, moron, just comments, the markets are crashing right now, and you're telling people to invest. And it actually motivated me to get on today and record an episode, because if you think about it for 5 seconds. When is the best time to put your money into the markets? You want to kind of ride the wave down a little bit, right? So you get the best price, right? There's a big sale on everything. Nothing changed with Amazon. Nothing changed with Apple. Nothing changed with all these great companies, Home Depot, Lowe's, Coca-Cola. What changed in their business? Not much, right? Not much. They're still doing business as usual and making a lot of money. There's still brand names that are household names that aren't going anywhere. You need anything for your house, you're going to Home Depot. You're still going to pay the same amount of money, right? Of course, the market there's a lot of turbulence, there's a lot of uncertainty, the economy is not looking as good as the economy is looking, but that doesn't really, make me think that Apple's not going to really earn that much money next year or the year after or in 10 years, right? Thinking long term, 10, 20 years. Amazon is going to be here in 10, 20 years. They're not just going to go out of business. They're too powerful, too big. People are too dependent on them. And now their price per stock, they did a 20-to-1 stock split, and now Amazon's trading at 100. After the stock split was 125, so they went down another $25. It's insane how much it's dropped. And people are like, you're telling me to invest in the stock market? What, at these prices in this market? Yeah. Yeah, because if you knew how to invest and you had $5,000 or even $1,000, right? You're not going to go in there and just throw it all in at once, and then the market goes down 10% tomorrow, and you're like, oh man, no way. No. You need to learn how to invest. You need to know that you have to dollar cost average. You need to put a little bit of your money in at a time. You need to have a recurring deposit on a monthly basis, on a bi-weekly basis into an investment account, right? Then allocate that across different, household names, dividend-paying stocks, good, valuable, investments. Not to get rich quick, not the Dogecoin, not the Shiba Inu, not all these dumb cryptos that, are not going to have any value. Not saying I don't like crypto. I'm investing in crypto. I'm getting crushed right now. But, I'm talking about the worthless coins. But you know what I mean? There's still those penny stocks too. The equivalent to a worthless crypto is like a penny stock or something that's nonsense. You're trying to shoot for the moon and then you go broke. You have to realize that there's a way to invest and there's a time to invest, right? In my personal opinion, the best time to invest in general is every single bi-weekly. Just buy a little bit more, take a little 20% of your paycheck, 10% of your paycheck, have it look like it's an expense. Put that right in the stock market. Boom in your investment account. You don't got to buy something every week, you could just, but have that money recurring deposit going there, and then buy a stock, 1 or 2 stocks a month, make it a goal. Then move up to 3, 4 stocks, right? Get a Home Depot, get 2 Amazons, right? Certain things like that. Google's going to split, get a couple Googles, right? The companies that you use every single day, you get on your Apple iPhone to go on Google Chrome to search up, Amazon.com. Right there, you got 3 companies that they're going to make money. Buy those companies. You get on your phone, you go on Home Depot to buy something for your house, right? Think about it. Think strategically. What products do you use? What services do you use on a daily basis? What are you dependent on, right? What would really crush you if it goes out of business? A lot of people really go to Costco a lot, and they get all their wholesale. They get their, everything in bulk, right? So if Costco, and you get the deal. So if Costco went out of business, a lot of people would be upset. A lot of people rely on Costco. Costco's always packed. Why are you not invested in Costco? I'm invested in Costco. And now that Costco's price is going down, along with Apple's and Amazon's, I'm thinking everything's on sale. It's like when you go to the supermarket and you got the filet mignon and $13.99 a pound. That was $25 a pound yesterday. And let me buy some filet mignon. You're quick to buy those deals, but you're not quick to buy the deals on the American businesses. So, I mean, that's honestly the reason why I hopped on today, because a comment, someone really came through just on my TikTok and was like, the market is crashing right now. And I'm sitting there like, yeah, it's a fucking sale. Go buy. What are you waiting for? You got no money on the side? Oh, because you went all in? Oh, well, whose fault is that? Mine or yours? It's your fault. You don't have no free cash. You have zero free cash. All of it was invested in the stock market and in crypto, and now you're down 50% everywhere. That's your fault. Lack of due diligence, lack of knowledge on how to invest, lack of liquid capital, lack of liquidity. Like, there's millions of things I could just, point out that you were flawed in your investment. So you have to make sure you know what you're doing. You have to get the knowledge. And once you make a mistake, don't just start pointing fingers. Oh, the stock market's rigged. This is rigged. This is rigged. Because you made the mistake and you want to point fingers and not blame yourself. You're the only person to blame. But getting back on topic of other things we want to talk about, why is the stock market crashing, right? We're talking about it is crashing, but why? Well, so what happened last week? Fed, the Federal Reserve, raised interest rates by 75 basis points. That's 0.75% of 1%. Well, no, it's 75% of 1%. It's called 75 basis points. And basically, what does that mean? Why does that tank the market? Well, immediately after, the market actually rose up a little bit, and then it started crashing down the next day and the next day. I think the NASDAQ was down this week like 5.8%. I mean, the S&P 500 is tanking. The NASDAQ is tanking. Dow is tanking. It's a mess. We're hitting levels that we've hit, in March 2020, and that's when we, had the uncertainty of a pandemic in front of us. Like, can you believe that in 2020 the market crashed this low because of a pandemic? You had no idea what was coming, and now we're nearing those levels again in these crazy drops. We're having the largest drop since then because of inflation, right? So let me break down what's going on so the people are trying to connect the dots, and then we'll talk about what we think is going to happen. So what's the problem that we're facing right now? Inflation. I talk about it all the time. 8.6%. It's on the rise. It's a lagging indicator, meaning it's going to continue to rise, and we're going to we'll start to see the prices fall realistically in our day to day before actually seeing that inflation number, actually fall, that what the economists track, the CPI. But so inflation is at 8.6%. It's much higher than 8.6%. That number is, I don't know who's calculating it, but the basket of goods that create it's called the CPI index, consumer price index. It is outdated. It's ridiculous, and they're definitely manipulating that, because 8.6%. Tell me how I was paying $2 and change in gas. Now I'm paying $6 in gas, right? That's not 8%. What about meat? Meat by it alone is up to 20 to 30%, and now there's gonna be more and more of a shortage because 2,000 cattle died the other day in Kansas from a heat stroke. It's a whole other thing I'll talk about. But you see what I'm saying? So 8% is kind of bullshit, but I'll tell you 8% because that's what they're reporting. But realistically, you got to brace yourself, because even Arizona, the cans, you guys remember Arizona? It was 99 cents since I was a kid, and it was inflation proof. Arizona has been inflation proof since I'm a baby, right? 99 cents for the big can. I walk into the store the other day, $1.29. It's 30% hike on the Arizona iced tea. I was offended. I didn't want to buy it. I mean, what is this? 30-cent increase? You're gonna do a 30% hike on my Arizona? All right, we're finding something else. We're going to Snapple then at this rate, okay? But you see what's happening, right? So inflation's a big problem. It's affecting every industry, every person, everybody, and the people that are really getting hit hard the most, hit the hardest is you and I, the everyday person, right? And now, what is the way to solve inflation? Well, the Fed, the government, Jerome Powell, and it's economists. They know the tool to fight inflation is, interest rates. And why is that? Well, a few reasons. To break down two of them, right? The two main reasons is because when you have high, inflation, that means the dollar that we have internally, the currency, it's weaker, right? A dollar can't purchase as much as it used to purchase, right? So we need to strengthen the dollar. How do we do that? Well, when you raise interest rates by a lot, that means that, what is an interest rate? The interest rate is the cost of money, right? So if I go take a loan, I get charged an interest rate. And if you think about this from a global standpoint, the U.S. government sells U.S. treasuries. They borrow from people. They borrow from other countries. They borrow from corporations. They sell treasuries, right? Which is basically a risk-free asset. And that risk-free asset, the risk-free rate, has an interest rate. The risk-free asset has a rate. And that rate is called the risk-free rate, right? And now, if, let's say, the U.S. rate is higher than Europe's and higher than all these other countries and regions, then a lot of the countries are going to go and put their money, go and buy U.S. Treasuries because that's the highest return they can get risk-free, right? So you're going to have people in China, people in the UK, people throughout the Eurozone. They're going to be, all those countries are going to be buying U.S. Treasuries because they're earning the most deposit rate here because it's a risk-free rate. They're going to get their interest, and it's the highest one. Now, what happens when they have to buy U.S. Treasuries? Well, they have to convert their euros and pounds and Japanese yen, whatever, into dollars, and then buy them with dollars. So now this gets into the FX market a little bit. The whole transaction of trading their dollars for our dollars, their currencies for our U.S. dollars, creates a high demand for the U.S. dollar. And simple supply and demand, as the dollar increases in demand, the value of the dollar relative to all the other currencies increase as well. And now when the power of the dollar increases, that's one way to fight inflation because inflation is the power of the dollar decrease. That's one way. The second way is a larger, it's called, actually, not necessarily, that's getting into the other tool that they're using. But what I was going to say, the other way is when you rise rise interest rates, it slows down the expansion of companies. And that's why it's, the stock market doesn't like when you raise interest rates because companies like Amazon and Apple, they take on debt to go and finance to grow and expand and, be more profitable, right? And that's good for the stock market. That's good if you own Amazon stock. You want them to take on that debt because they know how to use debt and they go do another project. Next thing you know, that's how they invest in the drone. That's how they invest in all the Amazon trucks you see. That's how they, invest in those factories, those huge factories you're starting to see in your neighborhood. And they're getting the deliveries to you, then in the next day, they're providing better service because they took on debt, used that debt to expand their operations to earn more profits, paid down that debt, and now the stockholders are happy because they share in that gain. Now, why does the stock market tank when you raise interest rates? Because companies like Apple and Amazon aren't going to do as many projects because the cost of the debt, the cost of the money that the loan is higher now. So they're going to start rejecting a lot more projects. That's keeping it high level, keeping it really basic. But that's kind of what's going on. That's why we're raising interest rates to fight inflation, and that's why the stock market's going down a little bit because people, the markets, they don't like when you're raising interest rates because they know what's going to happen. You're going to slow down expansion, you're going to slow down growth, and you're kind of throwing us into a recession. And for those of you who want to kind of like take a step back, and I'm no economist, I'm just giving you my take on this. When you look at an expansion, you look at a recession, it's just a business cycle, right? It's the economic cycle. We're going to go through and through and through. But what's going on today is we dropped rates so fast after COVID. Then we rising them so much. And now the problem is that inflation is still staying pretty high while we've been, consecutively dropping the rates. So it looks like the weapons and the tools that the Fed has is starting to be a little ineffective, which is a huge problem. And that's why we're in such an uncertain time right now with the markets. So there's a lot of stuff, to worry about, a lot of stuff to think about, and a lot of, thinking what we need to do and strategizing we need to do to really, be better off tomorrow altogether, you just simply put. Now, with that being said, why am I still telling people to invest in the stock market? Because do you think this is the first stock market crash ever? What happened in 2000? What happened in 08? What happened in 87? What happened throughout all these years? That there was a big crash. You look at the S&P 500 chart, isn't it still sloping upward? Are you investing today to take out your money tomorrow? Or are you investing today for your retirement or so you can just accumulate that wealth aside, right? Do you put your money in the savings account ready to take it out tomorrow? No. If you did, you would have just kept it in your checking account, right? You're putting it into a savings account so you don't touch it so it builds, right? You want it to grow over time and not have that many outflows, just inflows. Okay, so do that in the stock market instead, right? It's in the easiest way and the most passive way. If you know what you're doing, and if you don't know what you're doing, you could DM me HPA, and I'll show you how to invest in the stock market. It's one of the pieces of the program I put together called High Performance Academy. Again, personal development aspect and also financial literacy aspect, which contains that stock market mastery course if you're interested. But if you do it the right way, you'll earn 8% a year. You'll earn, anywhere from anywhere from 5 to 10 to 15% a year, if not more. I mean, if you just had your money in an index fund going back 30 years, you'll be earning like about 10.7% a year on average, and just in an index fund, buying SPY, the SPY, a fund that tracks the S&P 500. You would have had 10% a year. Think about that. I'm going to sip my coffee again. Think about that. But no, you think it's rigged and you don't know what to do, and you did one of two things, or both. Invest in that penny stock that your boy said is going to explode and you lost all your money, or you left in the savings account and lost a decent amount due to inflation. You know, the Fed targets 2 to 3% inflation every year, right? So regardless, they're trying to devalue your money year over year. It's a tactic they use. Why I think they use it, and it's pretty obvious why they use it, is because the U.S. has a lot of debt outstanding. So as the years go on, 2% to 3% inflation every year, the debt actually gets a little cheaper. It's like a hidden tax. That's why we target that. Right now, it's actually crazy, the inflation. 8.6%, which we all know it's more. I mean, we all know it's way more than that. But I don't know, man. There's a lot of topics to talk about. There's a lot of shit that's going on. And who's to blame? Who's to blame? Everybody's trying to point fingers. But in my humble opinion, it was all good until COVID. But then it was good after COVID, right? The market came right back up, V-shaped recovery. Remember the V-shaped recovery? And then Biden came into office. And everything went bad. If you're not blaming Biden and the current administration for the current state of this country, then you're a moron. You're a moron. He has no idea what he's doing. He's delusional, absolutely delusional. I'm not a Republican. I'm not a Democrat. I'm an independent person. I vote for who I believe at that current moment is going to do the best. And to be completely honest with you, Biden is a delusional idiot. And him leading this country is an absolute, it's horrendous. And don't get me started with Kamala Harris. She can't even do one thing right. I was at the restaurant yesterday. I was at this Mexican spot with my brother. And we're looking at the TV at Fox 5, right? And it was like Kamala Harris tasks to date. And the things that they were listing, it was the funniest thing. It was like a border protection. Oh, you've been doing a great job there. A+, right? A+. You are doing so good there. Next thing was like anti-bullying on the internet. Like anti-bullying on the internet. The vice president of the country is worrying about anti-bullying on the internet? What? You have nothing better to focus on than anti-bullying over them? Well, bullying is a big problem, and we really need to solve the bullying. I just paid $120 goddamn dollars for gas. Fix the fucking energy crisis right now, and stop worrying about people just cursing people out online. What happened to sticks and stones may break my bones, but words will never hurt me? What happened to that in the 90s, in the early 2000s? Everybody's getting soft. What the hell happened to that? Anti-bullying, the vice president of the world's largest economy is worrying about anti-bullying on social media. Hire someone to do that. Delegate. That's your big task. You build a task force about it. Yes. This is another way to censor the public. Absolutely insane. That's what you're focusing on? When I'm paying $120 to fill up a 435, what happened if I had a Lincoln Navigator that took diesel? Paying a fucking whole weekly check. I'm paying a minimum wage check to fill up my truck. Are you kidding me? And that's what you're focusing on. It's absolutely insane. But listen, this is why people need to vote. This is why people need to just actually open their eyes and see what's going on, because this is a horrendous situation right now. Not even the Democrats are claiming this administration or claiming Biden, thinking that he's doing a good job. If you are, you're delusional. There's a lot of delusional people out here. I don't care. I got to speak my mind, because if you're watching this and you're actually thinking that Biden's doing a good job, then you are absolutely blind, deaf, dumb, and I don't care who gets offended by that. I'm going to have Kamala Harris knocking on my door. Hey, anti-bullying. Anti-bullying. That's what you're worried about, Vice President. Love to see it. But with that being said, we're going to cut it here. Take some of the advice we spoke about today, right? We spoke about inflation, why inflation's rising, why it's causing the stock market to tank, and why you should be buying in the stock market today. Next week, we're going to talk a little bit about, honestly, whatever else is current news, whatever else I get motivated to talk about, because I have no idea what's going to come out of this administration and what's going to come out of the world come next week. But with that being said, stay positive, and we'll talk soon.